All right, this was a video I created for my members in the Pro Discord, but I thought I'd release it to you guys, to the public on YouTube. I think you can learn a lot from this short little video that I sent to one of our users. I talk about getting stopped out and kind of the psychology behind becoming a profitable trader. And the things that most traders overlook. So if you guys have any questions about this short little video, let me know down in the comment section below. If you'd like to join the Discord, be sure to click the link in the description below, and I will answer any and all questions there as well. All right, what's going on, Mike? So I thought I'd make a quick video for you to kind of go over some things, because I think you have the right idea, but you're trying to combine like multiple different strategies into one, which is, you can't be doing that. So I think you just entered along here on the flip of the volume. So you literally entered along right here on this candle, and your stop loss was like somewhere in this golden pocket, somewhere around here. Like, you are just asking, and then you're wondering why you're being exit liquidity, right? You're asking to be stopped out when your stop loss is literally in between the 618 and the 702. So for me, this is a late entry. I know in the video, Jay and I talked about entering on the volume flip. That's for double and triple bottoms with divergences, right? So clear divergences on the easy oscillator and on the RSI divergences. If I pull that up, I don't believe we had, okay, so we did have RSI divergences in this case, but we didn't have any clear easy algo divergences, and we didn't have that clear double triple bottom that we'd like to see, right? This is a late entry. Ideally, we'd want to catch this long somewhere around here. So you don't always have to enter on the volume flip, especially like if you look at the trend right now, we're in a clear downtrend, right? Like, we rejected from this upper trend line here. We've been making lower highs and lower lows. So if you're going to be taking a long in general right now, you have to be very careful about where you enter, and definitely don't be entering, don't be entering right here after price has kind of already pumped up a bit, and then put your stop loss in the golden pocket. So here's what I would do in this instance. And I took a trade on a few altcoins using this method, and I think this will really help you out. So I was already looking for a long position around here because I saw that we were making lower lows. The RSI had a divergence, and the easy oscillator was forming a divergence. After I see that bullish divergence there on easy algo with those reversal signals, that would be my entry for a long right here on the closure of this candle. I don't care that volume hasn't flipped yet. I'm anticipating that volume is going to keep going up. So I'm not going to necessarily wait for volume to flip. Now, if you look in the past, right, you can see that in a trending market, that would have worked, right? Like, the volume flipped right here on this candle. So if you would have taken a short, that would have been a good short to take because we're in a downtrend. Same thing right here. Once volume flips to red, you take a short, that would have worked out. It's not going to work out every time, right? Like, for example, right here, the volume flipped from red to blue. We had some divergences, but since we're in a downtrend, people are shorting up here. Like, we're literally underside testing this previous support level and dropping again. So, you don't want to solely enter based off of the volume flip, especially in these market conditions when you're taking a long position. So I'd be taking a long somewhere around here. For the fib, copy these fib settings. So I do like the golden pocket and the 0.5. I like this a lot better now. This is something I've been using recently that Eric teaches in the Crypto VIP. I'm sure you saw the video. But what I would recommend for you is to have the 702 and the 786 on. Reason being is this will help you with your stop loss. So when you're entering, for example, right here on this candle with the bullish divergence, obviously we have that dot on easy oscillator, your stop loss should be below this recent wick. It should be below the 702, so well below this level. The reason we don't want to set our stop loss right here is you have to look left, right? This candle wick right here is a liquidity grab. So there are buyers in this area that didn't get filled. Price is going to come back down to this level, grab this liquidity, and then head back up. That is why you're getting stopped out, because you're literally placing your stop loss at key wicks. Like, you are the exit liquidity. So you have to figure out why you're placing your stop loss here, and figure out another way to do it. So you're not, like, I wouldn't place my stop loss here near this wick at all. I'm giving myself breathing room in case price comes down. I don't want to be stopped out. So if you're long entry, is right here, right? And you're not moving your stop loss to break even, which, by the way, if you're taking longs right now, you should be moving your stop loss to break even. Like, there is no reason if you're up 1.5%, even 1% right now on the 2-hour time frame on Bitcoin, that you shouldn't be moving your stop loss to break even. So there should be no stop out trades here at all. If anything, you should have profitable trades right here. At least moving your stop loss to break even if you're not taking profit. But there's no reason you should just have a set risk to reward in these market conditions. So a big thing with trading is also figuring out when to move your stop loss to break even, not only where you're going to place it. Like, for me, I'm not going to have a set risk to reward right now. Like, I'm not going to put my stop loss here and target a 3 risk to reward and call it a day, because I know that we're in a downtrend. I know that volume is decreasing still. Like, we are in a downtrend. Yes, we're at a key level. We had some bullish divergences. That's a good long position. It follows all the rules. So if you want to take a long there, that's great. But you need to be moving your stop loss to break even because we are still in a downtrend. So you have to think of the overall trend of the market. To do that, you can go to a 4-hour time frame. And just see what price is doing, right? Like, we're making lower highs and lower lows. So right now, I'd be looking to fade any pump, even though we're at a key level, right? Even though we're at a key level, I'm looking to fade any pump until proven otherwise. Now, right now, what I'm seeing is a double bottom being formed, right? Remember, I just told you about that exit liquidity. And it looks like, price grabbed that liquidity, came back up. We're coming down to test it again. I'd be looking for a double bottom right here. So maybe right here wouldn't be a bad time for a long if we see some more confluences on easy algo, which I don't see quite yet. But when you're taking longs around here, make sure you're moving your stop loss. And like I said, never, ever, ever, if you're entering this late on a trade, price has already pumped this, 2% in a downtrend. You want to catch it when price is down here. Ideally, this is where you want to catch a long. Right? We have those RSI divergences. We have that easy algo mild buy. With that bullish divergence, that's my confirmation to go in the trade. So you're combining multiple different strategies into one. When Jay's entering off of the volume flip, right, from red to blue, that's just the final confirmation. It's not like he automatically enters every time he sees that. He needs to see a clear double, triple bottom before he sees this volume flip. And actually, most of the time, he's probably entering before that. This is kind of like the final confirmation, so to say. So does that make sense? Like, he's not entering right here all the time. He'll enter right here when the volume is starting to look like it's heading upwards. That is when he'll enter. So he'll enter right around there. But he's not always waiting till right here, because obviously that's a late entry. Now, another thing that I've been seeing you say is, I'm just following the rules. But like, for example, in this trade, it wouldn't have worked out. Well, unfortunately, you're going to have losing trades. Like, there's no strategy that's 100% winning, obviously. So you can't expect every single trade that follows a strategy to a T to become profitable. What you want is the most amount of confluence as possible and go to a higher time frame. Like, the most simple thing to do, which rarely anyone does, is to identify the trend. If you can just identify the market trend on a higher time frame, like, look at it from a non-biased perspective. What is price doing right now? Is price in an uptrend? Yes. If it is, I'm going to be looking to take longs at key support levels with a key fib as confluence with the oscillator flip and some divergences. All right. If price is in a downtrend, I'm going to be looking to fade any pump with short positions. For confluences, I'll look for easy algo mild buy or sell signals. The oscillator flip, I want to see volume decrease, etc. Right? If I'm taking a long here, right, my long thesis is, okay, price is coming to a key level. I'm going to wait for a bullish divergence and enter a long position with a tight stop loss, but I want to be below that liquidity zone right there. I want to be below that low wick so I don't get stopped out. And I want to move my stop loss to break even after 1% or so, because I know that we're in a downtrend. So if we're in a downtrend, it's probably not the smartest thing to try to take a long position and put my stop loss in between the 618, right? It doesn't make a lot of sense logically. But what most traders do is they don't think logically. In the moment, they'll think emotionally. All right, so volume is flipped. Obviously price has already pumped up a bit, but we already rejected from here. Okay, price is going to go up, right? So I'm going to enter a long position. And now I'm going to put my stop loss right here below this 618, below this swing low, and call it a day. Right? That's what a lot of people do. That's what a lot of people say on YouTube, right? Put your stop loss below this swing low, whatever. Yes, but you have to think of where price is at on the chart. Like we're still at a key fib level and zone on a higher time frame. So you wouldn't be placing a stop loss here. You wouldn't be entering a trade here in general, period, because we are in a downtrend. This is a late entry. And let me show you a trade I did on C98. It's like a 50, 60% trade. My next video will be live trading, so that will help you out. And by the way, this oscillator is for the next update, so it might look a little different from yours, but the same principles apply. So let me go to, okay, this is C98. So let me show you a long position I took on C98. I actually took it on Heiken Ashi. So this long position was a very, very good trade for me. So what I saw, actually I think I entered on the 1 hour. So I saw that we were at a key support level on a 4-hour time frame. Like if I look left, always look left, right? Always look left 100% of the time. You can see that price has rejected from this general zone, the support level, multiple times in the past. So I'm going to be looking for a long position at this level, at or around this level. But I want to see some more confluences. So what do I want to see? First thing I want to see is some divergences, which I saw, right? Price is making lower lows. The easy oscillator momentum is moving up. We had that buy dot. Volume seems to be increasing a little bit. Look at the RSI divergences, right? The RSI is making divergences. I entered a long position right here. And I placed my stop loss, look left, right? Below these wicks, because I don't want to be exit liquidity. So I placed them below these wicks, somewhere around here. So my stop loss is 5%, right? I'm using 10x leverage. I'm risking 60% of what I put in the trade to make 60%, right? So the risk to reward in this one is a 1-to-1 before I take profit and move stop loss to break even. But I'm still going to be holding a small amount to go higher, right? In these market conditions, because we are in a downtrend and Bitcoin was looking a little bit bearish, still wasn't looking as strong. So you have to keep these things in mind. So I entered a long position, right? And I think I took my first take profit. I think at around here, at around 45%. Around 45%. So normally I'd keep it riding and set a set risk to reward. But because I know that Bitcoin was looking weak and Bitcoin's in a downtrend, I'm going to be taking profits a little bit earlier. And this is something you have to do. You have to be aware of market conditions, and you can't always just hold the trade until it hits a certain risk to reward. A lot of traders are still doing that, but unfortunately, you kind of have to be on top of things. You can't just set it and forget it in every market condition. It's not going to work, right? You'll get stopped out a lot more, and you'll lose a lot more than you would if you just started to take profits a little more quickly, right? And you'll notice that the volume didn't flip until right here. But this is a late entry for me because I already entered over here. I'm anticipating the volume to go up. I'm anticipating price to go up. We have those reversal signals. We had that buy dot on the oscillator, right? Price is looking like it's holding this level. I'm at a key support level. I'm anticipating price to keep going up. So by anticipating, I'm going to enter before the volume flip. If I entered here, would this be a good trade? Theoretically, yes, right? You would have been in profit. If you would have entered this trade on the volume flip right here, that would have been a winning trade. So even if you took this trade, right, and you won this trade, and you said, oh, it worked out, I'm going to do that again. Don't do it. Even though you won the trade, it doesn't follow the rules. So it's a bad trade. So even if you lose a trade and you follow your rules and you get that entry anticipating what's going to happen next and you get stopped out, if you follow your rules, it's a good trade. If you win a trade but you don't follow your rules, it's a bad trade because overall, in the long run, it's not going to be consistently profitable. This right here is not a good trade for me. Yes, we had that buy signal. It is recapturing this previous support level, so that could be your basis for entry right there. So this isn't the best example to show you what a bad trade is because it's actually kind of a good trade. But you know what I'm trying to say, right? If it's not following all your rules and it happens to be a winning trade, it's still not a good trade because overall it's not going to be profitable, right? But the video with Jay, we were talking about specifically double and triple bottoms. Like this would be Jay's entry. I can tell you 100% because Jay entered this one. This is Jay's entry right here. So even though in the videos he's talking about, okay, wait for the volume to flip, that's the confirmation. He's entering before that though, most of the time, right? And this trade, I mean, was a fantastic trade and it went up, 11% no leverage. And we took profit here in the VIP, somewhere around here. And, you can see, like, look what's happening, right? As soon as we get that volume flip. In a downtrend with that sell dot and sell signal, price dumps, because we're still technically in a downtrend. It looks like we're starting to turn it around now because we're forming higher lows right now, so it could be the start of a new uptrend. But that's just an example of using market conditions to kind of help you out when I don't want to say help you out, but using market conditions to kind of mitigate signals that you would normally take, and maybe help you enter trades that you wouldn't normally take if price wasn't in a steady downtrend or uptrend. But don't combine multiple different strategies into one and try to do too much. Like, use a checklist, have your strategy out, and literally check off each box before you enter the trade. Every single time. If X lines up, I'm taking the trade. If X, then Y, I'm entering the trade, right? If 1, 2, 3, 4, 5 happen, I'm entering the trade. If 1, 2, 3 happen before it doesn't happen, I'm not entering the trade. If 1, 2 happen, 3 doesn't happen, but 4, 5, 6 happen, maybe I'll enter the trade. It just depends on your strategy, right? But you want to have a set of rules that you use to enter and exit trades. The problem with rule-based strategies, I'm going to tell you this and anyone else who's listening, and this is kind of a ramble now. The problem with rule-based strategies is that they vary based on the trade. So if you have a rule-based strategy, you have 5 rules that must be met before you enter the trade. That could work on some asset, but not another asset. Or it could work on this time frame, but not on this time frame. Or it could work on this asset and this time frame, but if the market conditions are in a steady uptrend or downtrend, you have to modify the rules a bit. So even rule-based strategies in and of themselves, you kind of have to use your own due diligence when you trade. This is why cryptocurrency bots are extremely difficult to make. Because when you're setting up a rule-based strategy, it might look good on paper. When you actually go and back test it, it might not be as good as you thought it would be. This is why most crypto bots fail. There really aren't many crypto bots out there at all. And I'm trying to make one, so I understand how difficult it is. It's really, really difficult because you're trying to follow, a set of programmable rules. But in reality, the best traders out there, it varies based on the trade. It just comes with experience. So if you just came here and you're watching that video with Jay and you think, I just don't understand, I'm putting my stop loss here, I'm being stopped out, the best thing you can do to start is realize that there's a reason for that. It's not bad luck. It's not that you just happen to place your stop loss there and it was a bad trade, right? There's 99% of the time, there's a reason as to why that's happening. And that's up to you with experience and obviously help from this community to figure out why that's happening and stop that from happening. So I know this is kind of a ramble. I hope this made sense. And let me know if you have any other questions, please.